Welcome to the Greenpill podcast. If you're just joining us, we are exploring how technology, community, and new forms of coordination can build, fund, and accelerate what matters in the 21st century. If you want to learn more, visit our website at greenpill.network, where you can download the Greenpill books for free, play with some of our ecosystem projects, join the Telegram, or participate in the network. Today, I am very excited to have Vitalik Buterin, the founder of Ethereum, as a returning guest on the podcast. And my co-host, Devansh Mehta, and I are talking about public goods funding in the Ethereum space in 2026 with Vitalik. If you've been a longtime follower of the show, you know that Vitalik and I have done an episode every December for the last several years about the public goods funding ecosystem. And the goal is to talk about what is going on in public goods funding in the Ethereum ecosystem in the past year, to do a retrospective, and then to guide builders for what they should be working on in the next year. So what do we do in 2026? Well, I think this episode was very interesting for hearing Vitalik's thoughts on where the public goods funding ecosystem is going. And in this episode, we talk about what does a reformed public goods funding space look like? Where does the money come from? What are the top mechanisms? And how do we pivot as an ecosystem of builders? And in doing so, in having this conversation with Vitalik, I've tried to make this podcast into a channel through which we can have a conversation with Vitalik about how it's going within this space and what trends he's excited about and where he'd like to see builders focus in 2026. So that was the goal of the episode. I think that you're really going to enjoy it. Let's cut over to the episode recording now. The next voice you hear will be myself and my co-host Devansh Mehta interviewing Vitalik Buterin about public goods funding and what it should look like in 2026. Enjoy. Hi, Vitalik. Hi, Devansh.
Hi, Kevin.
Excited to talk about public goods funding in 2026. Vitalik, you and I have done an episode in December every year for the last 4 years, and the goal has been to guide builders what they should be focused on in the next year. So my goal is to retrospect 2025 and then to guide people towards where's the alpha, where's the meta in 2026 in public goods funding in Ethereum. So let's start off with begin with why public goods funding, why is that important to you, Vitalik?
So I think there's two answers that I have to this. So first, there is the direct answer, which is basically that public goods are important, and so many of the things that we depend on in all of our lives are fundamentally based on public goods, right? This podcast will be available to everyone. Most of the algorithms that our blockchains and even our internet are built on are made by people and released to everyone for free, in the physical world, quality of water, air, everything. I think particularly in a space like ours that cares about openness and decentralization, the problem becomes doubly important because a big part of our goal is reducing reliance on centralized choke points and actors that can have power over everyone. But that itself removes a lot of the sort of more traditional and of corporate opportunities for monetization, because if you are at choke points, then you can use that to extract value, and so in some sense the funding problem is solved, right? And so if we're saying that we don't want that, then solving the problem in other ways becomes even more important. And so the better we can fund public goods, the better a chance we have at pushing the open world to a higher standard of quality and a competitive standard of quality to the more proprietary and commercial world. And then the second answer that I would give is that if you step back and think about the spirit of the crypto space and the kinds of goals that the crypto space has had from the very beginning, right? I think there are a few of these key directions that really stand out. I think one of them is censorship resistance, right? And basically saying we're going to create these alternative systems that give people who are excluded from traditional banks, other kinds of traditional systems, and alternative path that they can take for things like sending messages to each other, for payments, for investment, other forms of finance. Then more recently, of course, I know there is the whole kind of number go up side of crypto, which is you know always very strong, and it's the ultimate double-edged sword in a lot of ways because numbers going up pays for a lot of things, but on the other hand, it has this constant risk of compromising the space's ability to provide the other things. And then the third aspect is institution design, right? And this is the idea that, well, if we want to give people alternatives, then like you have to actually create those alternatives. And if you don't want them to like basically just be the new boss that eventually becomes the same as the old boss, you have to actually figure out how these things are going to maintain themselves, right? And so we've had this like long 10, 15 year this tradition of thinking about how would you design block rewards for a blockchain. Then we had DAOs. How would you govern a DAO? How would you govern a DAO that runs an Oracle? What about running a stable coin? What about running a treasury? What about something that's meant to be much more dynamic and startup like? And then this includes things like quadratic funding and quadratic voting. This includes all kinds of different voting mechanisms. I think a bit further from my own corner of the space and more in other corners of the space, but things like conviction voting have been around for a decade. And there's been this like strong desire to use this space as an opportunity for figuring out these kinds of designs for how to allocate capital, also how to run organizations or generally these kind of internet-based structures that require adaptability, but also some kind of long-term stability with the hope that these solutions can then be applied in other spaces as well, right? And I think to me, public goods funding is also a very important cluster of that.
Wow, that's a really great response. And I'll follow up on one side of it, which is like it's part of the spirit of the crypto space and some of the goals we have. So I think like right now we are seeing like the full narrative of stable coins and DeFi and RWA is really picking up. So I guess like why should builders be working in public goods funding as a space when it seems to be on an ebb? And why should they focus on this rather than like some of the more mainstream, rather than some of the applications which are becoming more mainstream now?
I think now is really the best opportunity to really reform this the public goods funding space and make it much stronger, and especially make it much stronger by using some new ideas, new technologies, and new principles that weren't really in play at all 5 years ago or 10 years ago, right? And so I think, if you make a new DeFi project or a new stable coin, then there is the possibility that you make something extremely valuable and extremely interesting. But by default, you're basically taking the world from 100 decentralized exchanges to 101 decentralized exchanges, right? And so it's a relatively saturated space. But with public goods funding, on the other hand, like it's something that the world needs, and it's something that is worth getting into, I think, precisely because it's in this kind of lull at the moment, right? Where there were a lot of these previous paradigms, and a lot of these previous paradigms have like basically run their course and like sort of hit their walls in various ways. And I think it's the perfect time. It's a really high leverage opportunity to kick this part of the space back into gear by like being successful with something that's really new, and that's based on some of the new technologies that have only been around for like the last 2 or 3 years.
To get down to the real thorny question that I feel like a lot of people in my network are feeling is, where does the money come from for working on public goods funding? Is it just
Mm.
charity? And I'll say that I think the answer was different in 2021 when you could run these billion-dollar DAOs just on vibes versus in 2025 where there's just less funding available for almost everything. And so in 2026, if I'm working on public goods funding, where can I expect that money to come from? And how do I compensate myself along the way? And or is it more of just like, is that something that we're just giving in the form of like charity?
So my long-term vision for how this space works is that we can create these mechanisms that are robust enough that like we can start plugging them in directly to like streams of funding that have very large scale, but at the same time like need a very high level of stability and legitimacy to be able to accept something. Right. So when I think historically the answer for this has been like block rewards of chains, right? And like that is a pool of funding that theoretically still exists. And for example, in like Filecoin, has been like they've been very public about their intention to like use their block rewards to do public goods funding. Zcash, the price has recently been going up, and they've been consistent about their intention to do that, right? So that's like historically been one of the answers, but also I would love us to explore more answers that like stretch beyond the crypto space. So they can give one example, right? So let's take software licenses. So like software licenses, like in open source software in general, is something that's this it's a very large. There are many trillions of dollars that depend on open source software. There's huge numbers of people that are writing it, and historically, these licenses have basically said things like, either you can basically use the software to do whatever you want, or there's been this kind of more copyleft version that, like, I've been warming up to quite a bit recently, at least compared to before. It basically said, well, you can use it, but if you make derivative works, so then you also have to share everything that you make and make it open as well, right? And historically, one of the challenges of both of these versions is like they have not really solved the monetization problem, right? And one of the ideas that like I've had for a long time is like potentially you could stick something like a Harburger tax into a software license, right? And you could have a license that says, for example, like basically, yeah, if you just use it, then you can use it for free. But also, if you use it in a way that involves any kind of like proprietary exclusion, then like you have to pay some kind of tax based on that, right? And so it's like the ideal way to do it is like some form of like it's basically efficiency increasing taxation in the sense that it's both like brings in money into some kind of a pot that's if we assume that the pot is like redistributed to good things by magic, and like that magic is exactly what funding mechanisms are trying to fill in, right? Then like it's helpful from that perspective, but then it also creates this kind of marginal incentive for people to like basically try to be less proprietary and more sharing than they otherwise would be, right? So like that's been like one of the ideas in my head of what like how we can try to like make that ecosystem both like more financially self-sustaining and also like explore this like design space of things like things that still fit into like free and open source software definitions, but like try to like capture those different pieces of the spectrum and kind of nudge people like toward openness and pushes everyone further on the spectrum. But then if we do that, right, then like all of these designs, they have this problem, which is like, well, if there's a requirement that you have to put money into a pot, then like, how is the pot controlled? And that requires a lot of stability, right? Because if you just say the pot is controlled by the pot foundation, then you have to ask, well, who are the board of directors of the pot foundation? And if the thing grows to $35 billion, then will the Pod Foundation have some kind of open AI situation? And, will the governance just suddenly turn into something completely different? Will no, the Pod Foundation gets captured by nonprofit people who have a weird ideology that goes in one direction, and suddenly everything goes into like maximizing preservation of 3,000-year-old languages, or like some other. Basically, or even like will it just like actually get just like taken out through corruption, right? Like if you have a board that controls $35 billion, there's lots of obfuscated ways to convince some of those board members to give you a share of that, right? And so the question is like basically you think of it as being like, especially if it's a viral license, right? Especially if it's something like the GPL, then like basically, it's sort of like a social equivalent of hardware, right? 'Cause, like when you make hardware, you're etching something into this piece of silicon where once you etch it in, it's very hard to change, right? And like here, the issue is similar, right? It's like once you make a viral license, once you etch it in, then it becomes hard to change, right? And like you want something that's like stable, that like a pointer to a mechanism that you can actually rely on in the long term, right? And like there's lots of different ways to do it, right? Like you don't even have to make a monolithic DAO at all, right? Like you could potentially say something that says, oh, like you have to, like, if you pay a tax, then like basically you have to fund your dependencies, and you could potentially even leave it completely open, like which dependencies you fund, right? And like the only rule is basically no self-dealing, and no self-dealing is like kind of vague, but at the same time it's like an area of law that nonprofits have already had to deal with for a century, and so it's familiar territory for a lot of people, right? So you could imagine concretely like an open source license that says something like, well, if you build things on top that you share to everyone, then no conditions, like basically you can do whatever. But then at the same time, if you make something that is proprietary, then you have to put some amount of money into like basically funding your dependencies. And like you could even say, well, the like that just like you get to choose what the mechanism is, as long as it's not self-dealing. And then you could imagine like deep funding gadgets and other gadgets that we're working on right now just like being a nice defaults that a lot of people just end up going for because they're lazy, right? So like that was a bit of a digression into like one particular example, right? But it's, like I think to me like the core is that we should be trying to expand beyond the crypto space, and like we should be expanding beyond the assumption that there will be blockchains sloshing around like piles of money based off of vibes that like we'll be able to keep on using. And like I think if we find those alternatives that will like it'll make the space much more sustainable, and it'll make it more real world impactful at the same time.
Yeah, just to say your answer back to you before we move on, if I were to sort of like reduce your answer down to a line or two, for me it feels like in 2021, when DAOs were just running off of vibes and it was super frothy, we could do things like quadratic funding, or things where there was just sort of a general aperture of public goods and like regen vibes. But now it feels like we're moving to a regime that's much more scarcity mindset. And also we have a bias towards provable public goods, things like cryptographic proof of stake, or proof of work, or like deep funding to me feels like much closer to proof of work than quadratic funding. And so the aperture has just like very much narrowed to the things that are provable and the things that are the core public goods of Ethereum. So like protocol guild and deep funding over things that are more like vibes based, like quadratic funding. If I were to reduce your answer down into that, would you push back on that?
Yeah, I mean, I think in some ways, actually, yeah, you raised the really important points that I didn't even get to, right? Which is finding funders that are truly general purpose is hard, right? And if you look at what quadratic funding is, fundamentally the mechanism is fully general purpose, right? Because the mechanism just says like, look, here's a formula. It's based on the number of humans, and so there's nothing in that mechanism that even biases it to support, like, say, projects on Ethereum instead of projects on Solana, or even instead of like projects on top of ChatGPT, right? And like that's not really a favorable thing for a lot of people to put money into. Like, sort of, you could even think of quadratic funding as being like, it's extremely lawful on the sort of lawful versus chaotic spectrum, right? Like, there's a certain kind of vibe sense in which it's basically assuming a world government, right? And I think both within crypto and in the world in general, I know we've definitely shifted toward that, like both a more scarce and a more chaotic world. And we want to build mechanisms that don't assume a world government. Like, I think, we want to assume altruism to some degree, but if we want to increase the chance that like people actually put money into pots, then like we have to, I think, acknowledge the reality that it's much more realistic for people to put money into pots that are at least somewhat connected to things that they personally care about, as opposed to some kind of general, like, according to Glenn Weil economics, make the world better sort of pot, right? And like, deep funding sort of does that, right? Because like, deep funding, the graph, it theoretically stretches over the whole internet, right? But deep funding as a funding mechanism, the funder has to choose the vertex that they're funding, right? And then the money goes to the dependencies and dependencies of that, right? And I think that's it's a very significant shift. It's a very meaningful shift, right? So like going from like assuming a world government to something that's sort of more robust to a chaotic world is definitely one of those other important shifts as well.
The sort of visual that's in my mind's eye here is bottoms up,
Mhm.
not top down, and
Mhm.
I'm imagining a sort of polycentric structure where the Ethereum ecosystem
Mm.
is polycentric, which just means many centers, and then it has its L2s and all of the apps that are built on top of that, and that's sort of like a tree structure. And if each of those were to fund its own public goods very narrowly, then the things that Ethereum depends on, like open source software and the internet and privacy and cryptographic trust, will be really well funded. But if each were to like 80/20, like fund its own public goods and then like a wider swath of public goods, you have enough funding streaming out for the things that you existentially depend on, but then also other pro-social things that are good for the world. Any reaction to that visual? And then I'll pass the next question to Devansh.
Yeah, I think I agree. And I think if you do this right, you don't need to hard code the 80/20, right? Because, like, if you take our own idea seriously and you take seriously the idea that the world is interconnected, then even just a rule that says fund your dependencies and then let that propagate further down the graph, like, in principle, eventually, yeah, like the water being in the world being drinkable is upstream of everything, including Go Ethereum, right? And so, in principle, like like you should be able to design a mechanism where sort of each part of it is local, but then it still adds up into something where if enough people at a broad enough scale participate, then it ends up covering everything. But yeah, I think the idea is to try to like, as you said, bottoms up, right? Like, make things that are decomposable into these smaller pieces, where within each of those smaller pieces, like the people that are participating in it and the people that are like policing that individual piece, like they only have to work off of knowledge about that smaller thing that they understand, and like you don't have every person on Earth, trying to figure out if cleaning the water is like more important or cleaning the air is more important, because that's something like most people have absolutely no idea about.
So I think that brings to like me to another question about like in private goods, we have this nice feedback loop where if you
Hmm.
build something which people don't like, you basically go out of business. But in public goods, we've seen like especially in the frothy era, we saw a lot of projects which should have died just continue chugging along because they had good social connections. So even in the example of like water, like who gets the right to be able to deliver water to the Go Ethereum developers or maintainers? And when should they go out of business because they are not doing their job properly? So how do we create like that accountability and feedback loop in public goods, which is so nicely present in private goods?
Mm. Right. So this is the sort of thing that's easier in the world of software than in the world of like physical things, right? Because in the world of software, like you can look at Go Ethereum and you can see like what are the other things that Go Ethereum uses, and like this gets into more of a judgment call, but you can even see like what dependencies of Go Ethereum are more important, what dependencies of Go Ethereum are less important, right? And like that's the big part that the like more complexity of the deep funding mechanism is really trying to address at scale, right? And so, like in principle, there are people like for any particular object, right? There are people who are close enough to that object that they are able to evaluate those contributions. And so if you can do that in a somewhat programmatic way, then like the hope is that if I make a software library that at first gets used by a few people, but then it falls away and like people stop building on it, then the facts that people stop building on it is something that will get noticed, right? And then the percent like dependency that I get, like that number will slowly decrease, and then eventually over time it will get marks down to zero, right? So like everything, of course, depends on like what the quality of that mechanism is, right? But the idea is that you try to like have that mechanism and you try to like base it on these like much more concrete questions of like to what extent is a thing that I'm building actually being used by other things as as opposed to this kind of like large scale politics where like everyone's trying to campaign like hey, quadratic fund my thing.
I like the analogy of if what you're building isn't valuable anymore, then less people will use you as a dependency, which means that your revenue streams will eventually dry up. So I think that's a very clear cut feedback loop. Yeah.
Mm.
Thanks. Yeah. Gitcoin started focusing on open source software and how we fund our dependencies. And I know that that's something that's near and dear to our hearts. And it also feels like an existential public good for Ethereum to really focus on, not only because Ethereum is built on open source software, but also because I think that the people who work on traditional open source software are very influential. And if there's funds flowing to them from Ethereum, it's kind of a charm offensive in a time where crypto is
Mm.
not very popular in the world. So
Mm.
I guess if I were to segue this into a question, it feels like open source software as a public good is a priority right now. I think privacy, I'm reading the tea leaves here, and privacy is an important public good.
Sure. So privacy is interesting, right? Because it's both a public good, but then it's like it's something that lots of people care about, and at the same time, privacy is often sort of by default in tension with business models, unless you do a lot of hard work to figure out how to combine the two. And so there's like very inherent public goods problems there. But then at the same time, privacy is also upstream of a lot of public goods mechanisms being able to work, right? Because
Mm.
if like all of the voting and all of the like ranking mechanisms, whatever you call them, are public, that creates like a maximum room for people to influence each other, right? And so like you can have bribery, you can have social games, and like we saw all of all of those things happening in like existing mechanisms and existing DAOs and so on, right? And so like actually, yeah, when I mentioned at the beginning that the space needs to be sort of reformed according to some new technologies and some new principles. I think I mean we talked about the new principles somewhat for the two technologies. For me, the top two are programmable cryptography and AI, right? And programmable cryptography, like basically, it solves this privacy problem, right? And that includes ZK, it includes like some FHE, and AI, deep funding, of course. The idea is that it's trying to like rank all of these and like millions of dependency edges in a programmatic way. And then like you have a human jury spot checking it. And the question is like, what is something that is even capable of delivering a million answers to questions? And AI is basically it, right? And so, like, that's like one of the ways of using AI, right? And then the other way of using AI is to basically see it as a kind of voter assist, right? So, like, the classic problem in DAOs is people are too lazy to vote for like more than 5 times. And so the idea is like, well, what if, you can delegate an AI to vote on your behalf, right? And like you're basically replacing yourself with a good enough model of your values and preferences that's much cheaper to execute, right? So, yeah, I mean, those are the two kinds of technologies. But actually, yeah, I wanted to ask a question to you, actually, maybe to both of you, like Kevin and Devansh, which is, this idea that like, the crypto space doing the open source funding is a way to like basically win friends in a space that's really, I think, values aligned with a lot of the spirit of crypto, but at the same time that has a lot of people that look suspiciously at it. I mean, in your experience, like, how much has this panned out? Like, what have been the responses of like non-crypto open source developers who suddenly learns that they got an X $1,000 payout from Optimism retro funding or Gitcoin or whatever other gadget?
Yeah, Devansh, you've been sort of on the frontier of this with deep funding, so I'm curious to get your feelings. But my sort of like high level vibe check is that a lot of people in open source software are completely dismissive of crypto, and they just can't get past the headlines about the volatility or the Trump coin, and there's nothing you can do that will convince them. And if you were to offer them money, they would turn it down if it was crypto because they don't want to have to deal with the taxes or the reputational risk. But I think that there's a little bit like when you're able to click into a little bit more nuance, and I'm thinking of the people that I know that go to a conference like Sustain OSS, which is Open Collective's conference, and they're really have an open mind about these things. I think if you lead with integrity and earnestness and you explore the problems and you show them that you're really in it for the mission like they are, then it can turn some heads. And so, I don't know what percentage of traditional open source is in the first category or the latter category, but
Mm,
there's definitely a non-negligible set
mm,
of people who are open to experimenting and open to having their minds changed. Devon, you've been on the front line of this
mm,
with deep funding. What do you think?
Yes, I think it's like in policy making, we always think in terms of next best alternative. So if we don't do this, then what's the next best alternative? And something I'm hearing is there's a lot of acquisitions going on for good open source repos. So that's kind of my read of the situation. That a lot of people, like even Carl Carvone at Open Source Observer, was complaining about how a lot of their own dependencies have got acquired by multinational corporations and conglomerates, and they can't use them anymore essentially, and they won't like be updated anymore. So I think that's kind of the frame that we should be presenting the problem in. That look, if you don't kind of try to experiment with novel crypto economic mechanisms, you're basically looking at an acquisition by a corporation down the line, and is that really the path you want to go down?
I think one of my kind of high level views on this is that it's like always healthier and more successful if you like mix financial outreach and social outreach. Like it's like it feels more genuine to people when you have an actual relationship with them and then you financially supporting them as part of that than just like totally random out of the blue bribery. And we're I think, like, like, as a community, we're getting better at the social outreach, right? I mean, even at DEF Connect, there's, like, Roger from Tor and, like, came and, a lot of other people from some of these more traditional, you know, I guess, cypherpunk outside of crypto type of projects. The being a Graphene OS people have come to several of the DIAC events. Like right, so there's like this growing intersection, and like the dependency funding concept kind of like feels very natural with that, right? Because the whole idea is basically that you're funding things that you actually depend on, right? And so, like, if I'm writing some random, like virtual machine optimization library, and I've never heard of crypto, and then suddenly, I get, like 1.5 ETH, and I'm told that like, wait, this money is coming to me because a bunch of projects in the Ethereum ecosystem like actually like use all of this stuff. Then like that feels better than just randomly getting 1.5 ETH for no reason, right? So I guess like that's kind of the hope, right? And then at the same time, I think like we should be trying to find ways to scale this mechanism to not just get these crypto specific revenue sources.
I guess I'm wondering, as we're sort of in this place where we're reforming the public goods funding space, I'm wondering, it feels like we're in a little bit of an uncanny valley between the 2021 era where there was lots of funding and good vibes, and this future where there's some sort of like flowing funding coming from this network tree of bottoms up L1s and L2s. And I'm wondering, what we do in that meantime, what keeps the space alive and what do we do during this liminal time? It feels like focusing on privacy and open source, those are growth areas right now. But, if I'm a builder in 2026 in this liminal time where the funding isn't quite flowing yet, it feels like my best move is to like cozy up to a treasury, figure out what they want, and maybe it's like open source or privacy. What would you focus on in 2026 if you were a public goods funding builder, Vitalik?
Yeah, I think my answer here is probably the same as my answer for the bigger question of like, what would you do if you had like new DAO governance ideas? Which is that I think working with new projects is more realistic than working with some of the older projects. And the reason is that for any existing project, like if you're going to change the mechanism, then like you have to fight against existing stakeholders. You have to fight against people who are fat and happy under the existing set of allocations. You have to convince people whose default instinct is, well, it's not broken, so I fix it, even when in reality it might be, like actually like a third broken or half broken. Whereas with newer projects, like not only are they starting from zero, but also they're hungry for ways to distinguish themselves and show that they're not just the same old thing, right? So basically, like if I were just coming into the space as like public goods mechanism designer, like I would cozy up to Aztec rather than cozying up to like one of the 5-year-old EVM L2s, for example, right? That's like that kind of analogy, right? So that's I think that's probably one thing. I would also seriously, like think. Otherwise, I would also remember to think about the problem as like not just a tech problem, but also as a like interfacing with a traditional world problem, potentially a law problem, and like some of these other domains, right? And like basically, think through the question of like what is a thing that would make like some of the big existing like open source software developers, possibly even people making open source LLMs, like some of these newer spaces, interested in like some kind of licensing model that incorporates dependency funding in some way. Yeah, I think the big commonality is basically like work with the new rather than working with the old, because I just expect working with the new is going to be easier.
As you were saying that, the sort of in my mind's eye, I was picturing different layers of sediment from different layers of history. There's kind of like the 2017 ICO era history that was built, and then the 2021 DeFi DAO era, and then now we're in this 2025 era where it feels like AI and institutional funding and stablecoins are the new meta, and we're going to have different layers of sediment as the ecosystem evolves, and the public goods funding, whatever the dust is from that layer of history is going to be redefined every single cycle.
Mm,
So I don't know. That's at least how I'm picturing the evolution in my mind's eye. But I love
mm.
the dictum to sort of focus on the new and not reforming the old.
Yeah, I mean, I think a lot of us really have to do that this year, right? I think, even in Ethereum, I feel like we've, renewed the ideas, renewed the memes, renewed the focuses in a lot of different ways, right? And that's definitely something that every ecosystem has to do.
Great. So I think like one thing we've seen from the 2017, 2021, and now is like a greater focus on how does this benefit me? So whereas earlier optimism was happy to be a general purpose funder, I think now we are seeing a lot more specific funding. Like how is this going to benefit my token? Is the funding mechanism going to involve use of my own specific token and give it utility? How is funding you going to benefit my bottom line? So I guess like
Mhm.
when Gitcoin had this analysis, which maybe Owocki can talk about it, if they had got tokens back from projects that launched it, how much would they have earned? But does that skew our decision matrix in the first place that we then try to fund projects that could give us a return? So I guess it's like, yeah, I don't know what the specific question is, but like, how do we balance the growing trend towards how does this benefit me particularly with the fact that some repos need to be uninfluenced?
Right. Yeah, I guess the answer that I've kind of given so far, right, is that like I think the thing that you don't want is like you don't want an explicit like charity percentile, right? Because if you have an explicit charity percentile, then like competitive pressure is going to just like knock that down to like 10%, then 5, then 1, and then like it gets forgotten, right? I think what you want is you want a social norm of funding your own dependencies in a way where it feels natural that you're supporting the things where supporting them has a lot of value to you personally, but at the same time, you're being very positive sum with the rest of the ecosystem and supporting some of these broader public goods.
Vitalik, I'm excited about Octant. I think funding public goods with yield is an incredible idea, and they just launched their vaults product.
Mm.
Wondering if you can comment on that.
Yeah, I mean, I think Octant is great, and I think having these treasuries that do things with yield is also a great idea. Um, I think also coming up with ways where other projects can follow on by like basically parking their capital and effectively donating their yield is great. Like I think there's a lot of weird structural reasons in the world, right? For why, like often getting someone to donate $1 million is harder than getting someone to park a pile of money in a way that gives you $1 million of yield. And so, I think that's something that we really should be taking advantage of.
Yeah, so I'll continue the rapid fire format that between these three things, like which is important in public goods, increasing the sources of funding, figuring out new methods for allocating it, or on accountability for projects once you give money.
Yeah, interesting. And I think all three are definitely important. Like I think we definitely need to focus more on the first kind of as a percentage than we did historically. And I mean, to me, then like as I've said, right, the nice thing about deep funding is that it sort of makes that first piece more tractable. Like the social norm of fund your own dependencies as opposed to the social norm of pay the tax that goes to the global public goods god, right? The second one, I think, continues to be important, and like I think it's good for us to continue to have these kind of rigorous themes that keep pushing the mechanisms forward. Yeah, and then the third, the accountability piece is interesting. Actually, I'm curious how both of you guys see that problem. Like, I guess, what are some successes and also like some examples of failures? And like, if you don't want to name names, you could even just talk about categories of projects that received some public goods funding and then like different directions that they've gone with it in the years that followed.
Yeah, for me, it feels like we're moving from this like sort of like vibes-based accountability model where it's badge holders or quadratic funding donors making subjective decisions around the epistemologically like the epistemology of quadratic funding's accountability is basically the more people vote for you, the more popular you are, the more money you should get. And that's just kind of like it relies a lot on the wisdoms of the crowd, where in reality the crowd is very low information and they just see a brand they like and so they fund it. Whereas
Hmm.
something like deep funding, I think, has a much deeper evaluation, deeper epistemology of whether this thing is valuable or not. So I'd say we're moving from like a shotgun to a sniper rifle in terms of how we build accountability for these things. Devansh, what do you think?
Mhm.
Yeah, I think the thing that's been most lacking so far is the nature of the infinite game. So even optimism, for example, only had its retro programs for 6 months at a time. So that sets up a bad game theory dynamic where I don't know if this program is going to be around in 6 months. So it doesn't set up that kind of like it doesn't set up the flywheel which retro funding is supposed to set up. So I think that's the first thing that's kind of missing, that, hey, we gave you money 6 months ago. What have you done in these 6 months since we gave you money? And then you get for another 6 months. I think that's something which deep funding will also have to address, like going ahead, that once we've given out the first bunch of allocations, getting some update on what they've done with those allocations, and having the human experts or the judgment or the people giving the spot checks, them being
Hmm.
able to see the utilization of that money and then making a judgment based on that. And AI is also getting access to their status
Hmm.
updates. I think that's going to be how things move forward. But making things into a continuous game rather than a one-off game, I think that's been the
Mhm.
missing element so far in these mechanisms.
Yeah, and I agree actually. I think like one of the weaknesses of these has always been that they're kind of designed in this round based and like manual kind of haphazard way where I think like just social pressure constantly leads to like them happening at totally random times. And one thing that I would love for deep funding is for us to like get as soon as possible, maybe within 2026, to the point where the whole mechanism runs on chain and including jury, yeah, and everything, and it just does like runs like clockwork, like whether monthly or weekly or something else. But I guess another question to kind of fire back on accountability, like what are the sort of theories of what accountability is that we're working on, right? So like or rather like basically like what is the carrot or the stick, right? So are we saying, if a project underperforms and it stops receiving money, might we want to say that like a project has to make some other kind of explicit pre-agreements that it'll do something like potentially like staying permanently open source or something similar, like doing something else?
Yeah. So I think like accountability I found is often linked to motivation, that
Hmm.
sometimes like when I'm left completely unaccountable, then I find it harder to get like motivated to do the work. Whereas when someone is there to hold me accountable, I often find myself charged up with internal energy. Like it's not rational or anything, but that's kind of how it is. And that's kind of the way that's in a sense the healthy way that I look at accountability now. It's less about someone coming behind you with a stick, but it's more like I don't want to let down these people. So I better like kind of, even though I feel like doing nothing today, I'm still gonna go out and like do something. Um,
So the stick is stuck in your own mind.
yeah, right.
Mhm. Yeah, yeah, no, I think that makes sense. Like, I'm sure even just someone coming and asking, like, well, what has been done since then, like, even without any financial motives attached, will like have a big portion of the effect.
And I wonder
Hmm.
if like one interesting approach might be that like someone who did a spot check on a repo would basically be able to follow up with them later on as well to like even learn, was
Hmm.
my spot check correct or not. So in a sense, the juror in
Hmm.
deep funding is updating their own knowledge, and that's also giving motivation to the like in like to that open source repo as well. But I think like baking in the accountability
Right.
question in code is actually super hard. I've not seen anyone like seriously attempt to do it beyond just self evaluation.
Yeah, that's interesting. Like, yeah, could you like ask jurors to make the same evaluation over multiple different time periods and then make see what changed?
Yeah, so like one thing which was very funny exercise I did was I would like anonymize the jurors, and then I would get on calls with the repos, and I would read out the juror comments on their repos. And like
Mm.
a lot of them found this incredibly valuable as an exercise. Like some of them like some of it was very critical as well on the repos, but they all actually loved it. Then like just getting this like raw unfiltered feedback. So I think that in a
Mm.
sense if we can build on that, I think that it's a promising, because unlike QF, which relies on like low information crowds, which no one takes seriously, like deep funding is like a few experts giving judgments. So even
Mhm.
repos which don't need the money still actually really value being part of the mechanism, just because
Hmm.
they get these experts to give judgments on them.
It's so interesting. Now I wonder, like, what if we also create opportunities for AIs to like attach reasoning with their messages. Um, right, like it's sort of the equivalent of the polymarket troll box, but for bots. Yeah, but like I think the benefits would be, I mean, one is of course even reading that LLM reasoning from the best traders, I'm sure would be valuable for repos, but then also it would give jurors some place to start.
Vitalik, the open source observer team is working on something called PSL. It's a profit sharing license where specifically if you make over a certain amount of revenue, you have to profit share. So I'm wondering what you think of licenses like this. They're not technically open source in the traditional way. They're profit sharing license, and so is that something that you would support? Do you think that that's an ongoing source of funding for deep funding or other public goods funding mechanisms that's useful?
Yeah, so like the version of that I would be enthusiastic about is something that sort of charges not based on like how much profit you get, but sort of based on something that approximates the idea of sort of how proprietary you are, right? So it's sort of the kind of Harburger tax line of thinking, right? Where if you make $1 billion without excluding anyone and without like having any trade secrets, then like go ahead. But like basically, the more sort of further away from a copyleft approach you're taking, then the more of a profit share you have to do. And I think the nice thing about that, like this kind of approach, like if we can figure out the right way to do it, is like one, it's sort of its efficiency increasing taxation because of the kind of incentive on the margin pushes people to be like less open if they don't really care, as opposed to being like more closed just in case, which a lot of people do. And the other thing is that it's like it still fits into the general like free OSS like license, like the FSF OSI definitions. Like you can describe it as being sort of strictly in between GPL and or even like AGPL and MIT in some sense. Like I'm definitely fine with like figuring out the most restrictive version of something like AGPL as a baseline, right? And then
Mm.
like basically saying like pay up if you're not willing to open up to that kind of high standard. So if someone like listening to this is a lawyer, right, and lawyers are a type of coder and hacker, like I would love to see ideas for like some concrete ways to try to do that. Like I think if that existed, I would absolutely write some of my code under it.
Cool. Well, yeah, Raymond Cheng from OSO is working on that, so
Mm,
maybe I'll connect you at some point. Next
yeah.
question to you, Devansh.
Yeah, so I guess I've been thinking more broadly about the relationship between security and public goods. We see this happen with national governments where the reason they would roll up both these functions is by providing public goods, you prevent riots and other things that might otherwise break out. So there is a relationship between security and public goods, but and then that ties into the role of issuance of a currency in general. So I don't know, like, what are your thoughts on like these three elements of security, public goods, and issuance, and the relation between them?
I guess what's the equivalent of issuance for a government? Like, is it like some type of spending? Is it spending in general?
Yes, I think like historically we've seen governments spend like any new money infused into the economy used to come in the form of funding military or public goods, so security or public goods. But with quantitative easing, we've actually seen that paradigm shift, wherein quantitative easing, the Fed puts money into the stock market essentially, and stock prices go up. But I think those have been the three broad areas that I've seen how the government uses issuance.
Right. Yeah, that makes sense. I mean, it's like this it gets into one of these like challenging topics of like what even are the incentives of some of these actors, and especially how different kinds of technologies might shape that, right? Because like one of my fears of the next few decades is basically that like AI is going to push us into like a pretty strongly anti-democratizing area, and possibly to some extent, like people being fed up with like low quality social media discourse might even go along with that, and the result of that would basically be that, like, well, if the physical world is secured by being much more surveilled, and at the same time, the digital world is a world where it's like much harder for people to have their voice, then like basically could a political entity survive itself while only providing public goods for a more limited group, right? So that's like this is one of those things that I mean, like it would concern me if that it were to become a much more long-term feature of our world. And so one of the things that like I think is interesting to think about is how do we create more ways to guarantee that like regular people continue to have power in a way that's like actually useful and actually substantive, and like actually gets high quality feedback from people, and so like it doesn't get like exploited by populism or whatever, right? Like if you look back to previous like technological eras, right, there has been a lot of these arguments that, like, for example, the switch from bows to guns is sort of pre-heralded the arrival of more democracy, because like bows were only usable by highly skilled people, right, and guns could just be used by like any random person. You could just like pick one up, and you're like even at the beginning, like even if like half as effective as some noblemen who put their entire life into training the craft. So then the question is like, well, which direction are future waves of technology going to go? And it's hard to tell, right? And the interesting thing is, like, technology to me is not exogenous, right? Technology is itself a result of actions that we take. And so technology is that puts like regular people in a position where they're actually able to have their voice heard, and are able to have like both soft power and hard power. Is like that itself is a public good that could be funded, right? And a public good that's arguably people in the most powerful positions in the world are not going to have that much of an interest in funding. So yeah, I think no, there's a lot of kind of complicated loops between all of those three concepts in that way.
Feels to me like we're stumbling a little bit into DIAC territory here,
Mm.
and I'm wondering if what you would say to the following question: how does public goods funding relate to DIAC? Does DIAC sort of eat public goods funding? Is that just a subset of DIAC? How do the two relate to each other? Because it feels like DIAC is a very sort of contemporary meme that people are rallying around. It feels like there's a lot of energy there, and I'm wondering if public goods funding should just fold itself into the DIAC umbrella.
I would say, yeah, DIAC, the way it's formally defined, is about making the world safe for pluralism. Public goods funding is about making the world fertile for pluralism, if that makes sense, right? So they're two very complementary pieces of the same coin, right? And so DIAC is answering the question of how do we create a world where like a lot of people can continue to be not just beneficiaries, but like active participants and active shapers of the future, and make that happen in a way that is secure, and that's stable. And public goods funding is, I think, about how do we how do we have that and make that happen in a way where the people participating like actually get compensated, and like the whole thing doesn't just rely on a very small number of donors.
Yeah, I guess my reduction or like the bridge I would try to build is if the D in DIAC stands for democratized or decentralized or defensive, then public goods funding asks the question that of those decentralization, democratization, and those are public goods, and so how do we fund those? How do we make sure the people who are working on the D in DIAC are well funded?
And I think, yeah, I mean, the the other reason there is a deep connection, right, is that the other approach to ACK, which could be corporate EAC, or it could be, what I call a national security ACK, which is basically where you do defensive and acceleration, but don't give a crap about decentralized. Like both of those already have natural funders, right? And so the D approach does not have natural concentrated funders. And so the way it can succeed is if it has effective distributed funding. And public goods funding is, to me, exactly about trying to make that happen.
Yes, I think the natural segue of this is how we can actually start trying to solve the free rider problem in a concerted way, so that if we want
Mm.
it to not just depend on a few, then everyone has to give a little bit. But like kind of how we've seen that happen with governments is kind of coercion of the minority by the majority. So if 51% say that we want this person as our leader, then all the other people, all the other 49% still have to pay tax to that, like to the person appointed by the 51%. But how can we actually do that in systems, and is that even a just principle? And more generally, how can we try to create incentives other than the incentive to defect?
Yeah. So the big weakness of coercion of the minority by the majority is, of course, what if instead of demanding public goods, the majority just demands the minority to just give all of their money to the majority directly, right? And so you have a transaction that is zero sum or even negative sum, but at the same time, kind of still gets forced by the mechanism. And the historical solution to this that I think I've been gravitating toward is basically, instead of empowering individuals, empower mechanisms and embrace indirection, right? Like basically make a mechanism where it's harder to express within that mechanism the idea of give me money, right? And the I mean, deep funding is one of those examples uh, of something that does that, right? Like if you imagine it was an iron law that you had to fund your dependencies. Like that is not something that creates levers that make it easy for the majority to just grab the minority's money for themselves, right? And so I think thinking about these ideas, right? And basically thinking about how do we express this idea that we will of creating strong norms, which could be just social norms, could be recursive licenses, could be some kind of sales tax or something else, and then putting that into a fund your dependencies rule, and then actually designing the details of that in such a way that they're not creating levers of power like that. Like that feels like the approach, right? That both solves the problem, but at the same time, it does not create the classic problem with that approach.
I think the natural follow up to that would be who decides what a mechanism is and what a mechanism isn't. So something which give me all the money, who is going to say that that is not a mechanism? Give me all the money.
Mhm, mhm.
So I guess that's are we concentrating power in the person who decides
Yeah.
what a mechanism is and isn't?
Right, right. I mean, this is super subjective, right? I feel like the things that I've written in the past on it, one is the article on credible neutrality. The other is my article a couple of years ago exploring sort of among the public, what do people think is an institution versus not being an institution. And there are a bunch of these general principles that kind of add up, right? One is don't write the names of specific people into the mechanism is a big one. Another one is make something simple, the mechanism should be much simpler than the total set of decisions that it makes. Another one is to keep it relatively slowly changing. A fourth one is that it should be open source. I think those are the four rules for credible neutrality that I had in my original post, right? And then in the post on what is an institution, the idea that it's a thing that is impersonal and that has this stability that stretches beyond the individual people that are in the in the positions was a really big part of it, right? So I don't think there's like a simple binary answer. I think it's a kind of complicated judgment that involves a lot of factors put together. And like ultimately, any mechanism always has a risk of being captured, right? Like any mechanism has a risk of like basically collapsing into de facto being give me money. And like we as a society do need a means of detecting that that's happening and delegitimizing it and switching to something else.
Yeah, it's like funny how many people in the space have told me, can we please create a mechanism called give Vitalik the money and let Vitalik decide? And and like it's something like broadly I've been thinking about like the difference between institutions having money versus individuals having money. And I think that's
Mm,
where the crypto and blockchain spaces was so unique that individuals
mhm.
managed to make money from like Ethereum taking part in the ICO, taking part in Bitcoin's initial block. Whereas with Facebook and a lot of Web2, it was basically institutions that earned a lot of money. But yeah, like it's something which like is elections the best way? Like is a person like can a person sometimes produce better outcomes than an institution would be like the broader question.
I think often yes. And I think a good institution even is one that creates space to have outcomes that give significant like control of resources to a person when that person proves themselves worthy of actually getting that amount of money, right? And sort of the world as a whole, I think sometimes kind of does that because like your ability to randomly get access to like $100 million is definitely positively correlated with technical sophistication, your ability to understand the world, your ability to understand what meets people's needs and various things. But at the same time, it's also very imperfect. Um, and so the like you don't want you know a button that says like let's have Duke One control all the money. Um, I mean we did, and a lot of people pressed it, and they did give Duke One control of their money. But yeah, like we want I think some better way of selecting the right kinds of people. Like even if it's super flawed, right? Like this is the other thing with I think public goods funding as opposed to other kinds of governance is that public goods funding is like I think actually quite error tolerant. Like if you give the right person like $10 million to fund things, and then simultaneously you give SBF $10 million to fund things, like quite plausibly, like that's still a net good, right? Because the difference between like the best person at making decision, identifying high value opportunities, and the average person is like very high, and to the point where like even 50% of it being like literally wasted is still okay, right? Like probably the biggest counter argument, of course, is that did SBF fund things that were incredibly net negative to society, and you like that's a question you can try to explore. And the strongest case for that is probably political lobbying, because I think like any kind of full of like big money political lobbying has big like downsides to democracy in general. But outside of that, I think like the harm of SBF had to do much more with the fact that he just did basically steal a huge amount of money from users, right? So yeah, but like that, this is one of those questions where if you're designing the mechanism, you want to think about, right? Which is that by default, like I think public like funding is hugely error tolerant because by definition, the difference between a 1x and a 10x is 9 times more important than the difference between a 1x or a 0x. But then, you do also have to ask yourself the question at some point, like, is there a risk you're contributing to a minus 20x? And really, that's, I mean, I think the statement I'm confident in is that the the arguments that the difference between a 1x and a 10x is 9 times more important than a 1x versus a 0x is more true for public goods funding than it is true for governance. Like for governance, the amount of damage that you can do by putting the wrong person in charge is much larger, right? It's like the default is on the good side, it's sort of 1x versus 2x, and then on the bad side, it's like 0x versus minus 100x. So that's like this for me has always been like one of the reasons why like I think it's good to treat public goods funding versus other forms of governance differently, right? Um, and when you get into other forms of governance, I think like this is the convex versus concave question, right? Like you will want to like really think about like where on that spectrum you are, and I think that ends up deciding a lot of like how you actually decide like what the mechanism is.
My next question is about pluralism.
Mm,
So, pluralism in public goods funding.
mm,
I'm just going to rattle off some of the names of people who have done public goods funding
mm,
campaigns in the space, and then I want to react to the pluralism of them and whether
mm.
that's a good thing or a bad thing. So, Moloch DAO, Gitcoin Grants, Optimism, Arbitrum, Cult DAO, Glow Dollar, Drips, Cello, Flow State, DAO Drops, QAC on Giveth, Octant. Let's see, who did I not cover so far? Bloom Network, Protocol Guild, DAO Drops, Public Nouns. So, Vitalik, these are all people who have run public goods funding campaigns and funded hundreds of millions of dollars of public goods just in Ethereum. Do you think pluralism of public goods funding is a good thing? And I know we have this attitude of client diversity lower in the stack in Ethereum. Is it important to extend that up and have a pluralism of public goods funders in Ethereum? And or is it just a fucking pain in the ass to have to get funding from all these places and track your grants in 17 different locations? And could you just react to the pluralism of public goods funding in the space and whether it's a good thing and what are the challenges and opportunities introduced by it?
Yeah, and I would say in general, it's much more a good thing than a problem. And I think for me, the biggest kind of fundamental reason why is basically because for a lot of projects, like the thing that matters is just like did we accidentally not give any funding at all to someone who really deserves it? And in that sense, the ability to shop around is a good thing. And also, the ability to shop around is good for minimizing the authority of individual actors, which is also important in the ecosystem. Where, like, I think like it's good to be able to have researchers that are feel confident in saying different things, and like I think the Ethereum ecosystem is better if I mean even if there is like entities on the from a very different side of the ideological spectrum, and like they support people who are much more accelerationist on protocol issues than I am. Like I think it's good to have so to let all of the different sides have a voice. Like basically, the risk of people who have the wrong kind of view being able to express it is much lower than the risk of people who have a perspective that's really needed not being able to express it, right? And like that's I think in general been the reason for ideas like freedom of speech and so on. And I think here, like a big part of that is making sure that people are like actually comfortable speaking their minds. And like that's something like that's a spirit that I think we've tried to support even within the EF. And like we have, there's like the core protocol team. There's also the Silva culture group, which is not allocating money, but there to sort of help like keep provide their opinionated like views of like what the spirit of Ethereum is and what should be going towards. And like they've done a lot to like stand up for things like decentralization and trustlessness. Um, Another thing is also that like the ecosystem is going to inevitably have very powerful commercial actors that have an agenda, and that's especially true in this era of the space. And we needs to make sure that people have alternatives to that, right? So that's yeah. So in general, like I would say pluralism good. I would say the thing that he wants to avoid, I think, is like splitting every organization so much to the point where like you're basically creating a public goods funding problem internally, right? Like if you split the Ethereum Foundation into 100 pieces, then like there's a way in which that's like that divides each piece's power by a factor of more than 100, right? And it would not be in a good position to counterbalance, like say, some large corporate user or like some large application or L2 or something else. So that's probably one of the limiting principles to me.
What do you want more focused on in 2026, which is not there today? Should it be new mechanisms? Should it be new ways of creating funding pools for these ecosystem goods? Like what type of like we've had about one new mechanism every 2 to 3 years on average, QF and then protocol guild and then deep funding. So I guess like
Mm.
what should be the next thing on the horizon, if anything, and what areas should people focus on now?
Yeah, and I think one answer is just deep funding to a mature standard of quality. Right. So the original vision with the tree, on-chain mechanisms, multiple levels, be a thing that anyone can plug into. So that if someone has the problem of like I want to or I have to fund my dependencies, what numbers do I give to whom? They just have a ready thing to give them answers. Yeah, I think that's a big part of my answer. Also, more mature answers on like sustainable ways of where we get the money from. Um, and the thing, like I've given a couple of examples, and like we definitely wants to move beyond just being block rewards.
Vitalik, my last question is about
Mm.
Ethereum localism. So there's a
Mm.
bunch of people that are exploring this idea of how can we use open source software, public goods funding, privacy tech in local environments. I've been sort of in part trying to juice this movement a little bit because I think that there's a lot that we can do that local governments and communities don't know how to do already. Have you been following Ethereum localism? Do you have any opinions on it? And what do you think the bright spots are that people could be focusing on leveraging Ethereum in their local communities?
Yeah, I mean, I admit I haven't been sort of following, Ethereum localism, the flag, but like what you described sounds like a good description of a lot of individual projects that I've been following. I mean, I think it's good that we're seeing some of this increased work in applying some of our governance thinking and some of our economic thinking to some of these more like local real world environments. I mean, to me, that's a very healthy and positive thing. Yeah, because there's a lot of these ideas where like I would actually think that like real physical environments might even be better test beds for them than like blockchain DAOs because like basically I think the set of goals is often like more interesting, right? Because especially in this kind of era, like for a lot of token holder DAOs, like the core objective is number go up, and then like basically, yeah, and there was a debate between different ways to make the number go up, and like that's something that like I would think is in some ways sort of homogenizing and even creates a pressure against them, like these projects being interesting in some deep ways, right? So I mean that's again, I think one of those places where within the space, I think having just individual people with good ideas that are and visions that are willing to just push them forward really continues to be important. But within kind of these more real world and physical environments, like you just have people with a lot more goals, whether it's maintaining some particular public goods within a city, whether it's a local media, whether it's like figuring out some kind of local economics. And I feel like this is a space where we've sort of kept poking into for a long time, right? Like I remember back in the day, yeah, there was the quadratic funding round, I think, for local businesses in Denver. And over the last couple of years, we've been making more and more inroads into some, like small and medium sized country governments on, like ZK and digital ID sort of issues and figuring out like are there like voting things that make sense to do on top of that. it feels like the technology is getting more and more mature to the point of being able to actually do things, right? So I think it's a great time to do that.
Great. Is there anything we didn't ask that you want to talk about?
I think I actually wanted to ask another question back to both of you guys. What to you would be a realistic success for the public goods funding space? Let's say by the end of 2026. Like if things go well and satisfy the kind of goals and dreams that you have for this space, like what would the end of 2026 look like?
My goal would be that the median person who has the ability to build a DeFi protocol or any sort of protocol is experimenting with public goods funding, at least on the side, and if not full time. I think that public goods funding in Ethereum itself has been sort of underfunded in this liminal time between the 2021 era funding and the future where we think this funding flywheel is going to get going. And I want to be able to make a credible case to PGF builders that this is worth their time, that they will create a legacy for themselves, that they'll be able to feed their family and pay their rent by working on PGF. And then, you'll see an inflow of talent and execution and innovation happening in PGF. I'm working backwards here from what I think is a big risk is that this space kind of dies on the vine and suffers from a lack of energy. We need to execute this pivot into the reformed PGF space and then really support the people that are doing the right work in it. So the goal for me would be then that the median person with smart contract skills can actually work on PGF and feel like they're doing something good and building their career by doing it. What do you think, Devansh?
Yeah, so I think something I've been thinking about in deep funding is whether to focus on horizontal scaling or vertical scaling. So horizontal scaling would be that we get many different teams and DeFi builders and products to fund their dependencies using the deep funding method. So in that sense, the pilot run that we have going on right now is more of a demonstration effect that, hey, this is how you can actually do this in like an easy way. But the hope is that like ENS will run its own deep funding instance for its dependencies. Lido would, Aave would, all of them would do that in their own instance. And the second would be vertical scaling, where, like I think as Vitalik alluded to earlier, you could technically build out a graph for the entire internet and for the entire world, which is like a value graph. So that would be more the vertical scaling. So I think on the horizontal front, like hoping to see more ecosystems take up deep funding as a method. That's one goal. And the second goal in terms of vertical scaling would just be that from the initial pilot that we have right now, how much money actually gets channeled through it, how accurate are those weights, how good is the pilot, and like are more and more nodes being added to it? Is it something which is continuous and live? So those are some thoughts right now on that.
Yeah, any reaction to either of those, Vitalik?
Yeah, no, I think I would love to see both of those happen. And I think the thing I would add from my side is I would love to see list one of these things like actually running live and distributing money month by month to projects. Like I think to me, if I had to look back to the highlight of 2025 in Ethereum is that privacy has become a very mature thing, and so for me now it's like flipped to the point where the average payment that I make is a privacy preserving payment, and like I wants to see that kind of success. Like I don't think we're gonna get to the point where like the average dollar a public goods project receives is from one of our public goods funding mechanisms, but like to get to the point where there is steady value of some level flowing to at least some group of people.
Yeah. Well, I think that's an excellent place to end it. Devansh, thanks for being my ride or die co-host, and Vitalik, thanks for making some time to talk about this with us. And to everyone listening, thanks for listening to the end, and we'll see you in 2026.
See you in 2026.
Alrighty, thanks for listening to the Greenpill podcast. Very excited about this episode. Vitalik, obviously, huge influence on the Ethereum ecosystem as the founder of Ethereum, but also is one of the reasons that we have public goods funding in the Ethereum ecosystem and this ethos of funding what matters in the ecosystem. So this episode, I think there's a lot of great takeaways, and I'm curious to hear what you think. But the notes that I'm taking is reforming the PGF space in 2026, focusing on things that are growing, things like open source and privacy and programmable cryptography. Those are growth spaces right now. Obviously, AI and info finance, a growth space for the PGF ecosystem right now. Focusing on verifiable truth and things that are close to the centers of the ecosystems that are being funded. So in Ethereum, that means not just proof of work and proof of stake. Well, I guess just proof of stake these days, but not just proof of stake, but also how do we fund the open source dependencies upon which Ethereum depends? How do we focus on the verifiable truth of those dependencies? I think is the narrower focus of where we're moving as a public goods funding space in 2026. I think if I was a builder in the public goods funding ecosystem, I would be cozying up to new projects, 2025, 2026 era projects, and solving their issues from a public goods funding perspective, connecting the cost center of open source software and the building and R&D that they're doing with the revenue center of token generation and supply. And just generally getting funding flowing as a default, I think is a priority for the space in 2026. Vitalik also had some feedback saying, think of the problem not just as a technology problem, but these are social and law problems too. Thinking through how public goods funding can be alpha for an ecosystem, a competitive advantage for an ecosystem is I think part of the problem. So all in all, I think an excellent episode for us to think about reforming the public goods funding space for more relevance and upside in the future. And I hope you've enjoyed listening to the Greenpill podcast. If you're still here at the end, please remember to like and subscribe, share this episode with your friends, especially if they're building in the PGF space. And we'll see you in 2026. Thank you.